everyone. Every semester I get quite a few questions regarding retained earnings, and I think it's probably because the book doesn't do a really good job explaining it. So when I know it touches on a couple of your homework problems, so I want to kind of go through and show you how to get the most out of my finance lab and do a little explaining as well. So when you get to a problem like this, number 5, and it's asking you to prepare a statement of retained earnings and determine the dividends paid last year. The first thing it asks for is distributed earnings. What distributed earnings are your dividends. Those are earnings of the company distributed back to the owners. And it says to use this data table to go ahead and complete that information. So you get here, let's say you're like, oh my gosh, I don't know what to do. Well, my Finance Lab has a really great tool, and it wasn't available right away, but it is now. It's called View an Example. So go ahead and click on that. It's going to give you a sample problem with different numbers than the one that you have, and it's going to give you some little hints and tips of how to solve the problem along the way. So this one says to compute earnings before interest and taxes. With this particular problem, I had already prepared some information in Blackboard, some video tutorials under the Week 2 tab that you should be watching. Week 2 video tutorial, interpreting the financial statements. So if you haven't already, you need to go back and read that before you solve this problem, or listen to that, because I think it explains a lot. You have to have a good understanding of the financial statements, or you're not going to be able to solve these problems, because they kind of make you back into them to test your comprehension. So let's go back here to the problem, and let's pick up our data table. First thing we're going to have to do is solve for net income, and that tells you here compute earnings before taxes and then subtract the taxes to get to net income. So what I like to do, I use Excel immensely because it helps me out and saves me a lot of time, especially if I don't get something right. I can come back in and change it. So what I've gone ahead and done is put together an income statement. Well, if you know from watching the prior video tutorial, an income statement is revenues minus expenses. So essentially what you've been given here, partial income statement. The only things that are missing are going to be your taxes, which they tell us are interest of $18,600 and a 40% tax rate. So I've gone ahead and plugged them into Excel and the dollars. So $351,600 is given to us. All of these numbers are given to us. The only thing that it hasn't been given, which I did calculate, is earnings before interest and taxes. So the way I did that, I just clicked on this auto sum, it picked all those up, and I hit enter. Interest expense then was given to us, $18,600. So we had our EBIT, earnings before interest and taxes. I subtracted my interest, so now I have earnings before taxes. Oops, that's probably not right. Let's go ahead and auto sum all of these. $165,600. So I need to multiply that by my tax rate of 40% to find out what my taxes would be. Sorry about that. So then I'll take my earnings before taxes, subtract my taxes, and I get net income of $99,360. It doesn't sound right. Oh, this isn't correct. Let's fix that. So that was earnings before taxes minus the interest expense. There we go. That looks better. So $73,500 minus taxes, $29,400. Here is my net income. We need this. This is going to be important. $44,100. Okay. From there, we can go ahead and prepare our balance sheets. If you notice, they didn't fully complete the balance sheets for us. They left out retained earnings, accumulated depreciation in 2011, and retained earnings again. So we have to understand what drives the statement of retained earnings. So what you can see here again, I just copied that information over into my own table. If you know, total assets have to equal total liabilities plus our equity account. So these two numbers have to equal. I can go ahead and total up my total assets. They've given me all the information. I'm just going to sum that. That means that this total liabilities plus equity has to equal. Now that I know that, I can subtract out my total liabilities and my common stock to calculate my retained earnings. So we'll go ahead and take this number, total liabilities plus equity, minus total liabilities minus my common stock.